Pension problems. As a hedge fund manager, I have a whole team to help me analyze people's pensions. If you want a free pension review, we're more than happy to go through it because there is a major pensions problem in Britain, in the United States, in South Africa, in Australia, in all the Western countries I've come across, which is underperformance, low growth. And the major factors behind this are that the IFAs and wealth managers don't listen to what the client want. And so they deliver what the IFA wants to give them, which is usually just slightly above bank interest, so that they can manage those expectations of their clients lower. And when they exceed that low bar, they can say, I told you I could do this. It also means when there's less growth that the clients tend to leave them alone because the clients just assume, well, it's a bit better than the bank, so it's okay. Whereas if you try and get superior growth, tracking an index, for instance, you might fail by more than 1 or 2 percentage points in a year. Well, you're supposed to invest long term anyway, and the client might pull their money. The job of the IFA is to try and keep your money for as long as possible, a bit like a vampire putting you in on a drip. They just want to suck the blood for as long as they can. They don't want to actually kill you. And blood-sucking vampires is what IFAs and fund managers, in my experience, are. And I'm speaking as a hedge fund manager. I know this industry. Can your IFA say that? Can your IFA say they've won competitions in the Financial Times and on Bloomberg TV to forecast the markets? They've written 18 books published by the Financial Times. Can they say they've lectured, sorry to sound arrogant, lectured on behavioral finance and exactly this point at Oxford University as a visiting fellow in business there? Now, the reason I make these points of credential is because too often people just sleepwalk into a wealth manager or an IFA or a fund manager who sit there having passed their multiple choice exams and spewing out the same old nonsense. Now, I know they do other things. They've told me, the IFA said, well, we don't just pick bad funds which underperform. We have other jobs like foot rubs and back massages for clients. I understand you've got other jobs as well. But until they get the right credentials and they actually know what the hell they're talking about, and no, don't ask me, is there a good one? Never met one yet. My life's mission has been to teach people to do it themselves because they can. That's why SIPs and ISAs were created in the UK and 401ks and Roth IRAs in the US, because they want you to have the freedom to be able to do it yourself. Okay, it's not that complicated. If you can open a bank account online, you can open a SIP online. And as for selecting the right things, you're not forced into risky investments. There are low volatility funds, even index trackers, for God's sake. Even Warren Buffett says that, okay, that you could do and use instead. Have a look at the links around this video or alpeshpatel.com/links. alpeshpatel.com/links. Set up a call with my team. They will for free analyze your pension, or you can fill it in a form and then have a call with them if you wish afterwards. They'll analyze it, send it back to you. I'll cast my eye over it as well. Okay, sorry if it sounds a bit arrogant. I apologize. I'm in the finance field for a start, but I'm bloody angry at all of these fund managers and wealth managers and all the rest of it. And so sometimes my anger can look like arrogance. It really isn't. Trust me, if you've been in finance long enough, you've had a few kickings. 2008, actually no, that wasn't too bad. 1987. Thank you.